Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The rupee recovers after breaching the psychological 90 to $1 barrier for the first time amidst incessant dollar buying by foreign funds. Dealers cite limited intervention by the RBI. The rupee is down 2% in the last 2 weeks and 5% since the start of the year against the dollar. The government's chief economic advisor says he's not losing sleep over the weakening rupee. He expects a rebound next year, adding that current levels are not hurting exports or inflation. CNBC-TV18's Newsbreak confirmed just months after getting relief from the Supreme Court, JSW Steel sells 50% stake in Bhushan Power to Japanese conglomerate JFE for over 15,700 crore rupees. After backlash, a U-turn from the government on the Sanchar Saathi app withdraws the directive to phone makers, making it mandatory to preload the state-owned cybersecurity app. Chaos at major airports across the country. More than 100 IndiGo flights stand cancelled, leaving thousands of passengers stranded. IndiGo blames a multitude of unforeseen operational challenges, including a minor tech glitch and updated rules for crew rostering. E-commerce platform Meesho's 5,400 crore rupee IPO is fully subscribed on day one. Retail portion gets booked in the first hour, but higher allotment to local funds draws the ire of some global investors who walk away from the anchor book. India and Russia all set to bolster economic ties when President Putin arrives in New Delhi on a state visit tomorrow. India set to push for increasing pharma, agri and textile exports. Prime Minister Modi and President Putin will also discuss a free trade agreement which could be signed in the future. The Kremlin calls the meeting between President Putin and US envoys Witkoff and Jared Kushner as constructive, but both sides are no closer to a resolution. President Putin accuses Europe of preventing peace, says if Europe wants a war, Russia is ready. Maruti Suzuki steps up the electric vehicle push, plans 1 lakh charging stations across India by 2030, promises several new launches as it outlines an expansive electric mobility roadmap. Amazon throws down the gauntlet to Microsoft, Google and the entire AI ecosystem, announces next generation of chips, large language models and AI agents at the annual Amazon Web Services Summit in Las Vegas. Well, straight to the big story that we're tracking this evening. The rupee breaching the psychological 90 to $1 barrier for the first time ever. Now, dealers cite limited intervention by the Reserve Bank and incessant dollar buying by foreign funds. The rupee has now fallen by almost 2% against the dollar in the last 2 weeks and 5% so far in 2025. That's where it closed for the day. 90.19 is the closing rate for the dollar rupee. It did see a marginal recovery before it closed. Our team of researchers are here to decode the fall in the rupee and its impact across various sectors. Let's go across to start with Lata on what happened today and where the rupee is now headed.
Well, first up, the support for the rupee came towards end of trade, late trade, not really end of trade, the last one and a half hours, with the market giving support. That's very important. It was not because the Reserve Bank lent a horrendous amount of, sold a horrendous amount of dollars at 90.29 that the rupee went towards 90.11 after that. It was because there was an exhaustion of selling. You know, that's how usually bear markets end. But that exhaustion of selling was probably triggered because of the chief economic advisor saying that he is not losing sleep over the rupee's fall. I mean, is this not the best of times for the rupee to fall, considering that, you know, even if prices go up, we are not worried about inflation at this juncture, and that he expects a rebound very soon, probably next year. That was used as a trigger, but really there was an exhaustion of selling also, because how many times do you sell over the same news? We all know about the October trade deficit. We all know that the trade deal has not come in. We all know that there is a BOP deficit for probably 2 years in a row. The BOP number for the second quarter came on December 1st, and that triggered the accelerated selling on 2nd and 3rd of December. But now all that is priced in. So with Reserve Bank and government both saying that, okay, let the market take its course, perhaps, you know, the bears, the rupee bears came in and covered their rupee short positions, or the dollar longs were unwound.
Typically, the simple math tells you that a 1% rupee depreciation benefits margins by about 25 to 30 basis points. But then again, it depends on the kind of hedge ratio companies have. But, outside of that, one reason for the increasing optimism surrounding or why IT stocks and shares are seeing a look in is the underperformance. And also now the AI infrastructure, the global AI trade is moving from infra build out. They're saying eventually maybe that's going to peak out at some point of time. There is diminishing marginal utility, and the focus will shift to application services and maintenance. And this will, unlock net AI revenue for the sector 12 to 18 months down the line. And plus, yesterday when we were talking to experts, they're saying assuming the Indian IT companies grow by 5-6%, plus you throw in a dividend yield, that makes it fairly attractive, and therefore it's time perhaps for to take a look in at the sector.
A mixed impact on the oil and gas space. Let's start with the crude producers because they tend to see realizations in dollars, so it will be a benefit for them. For every 1 rupee depreciation, they will see an improvement in their EPS by 1 to 2%. This is ONGC and Oil India that I'm talking about. If we talk about Petronet LNG, their regasification margins, basically they re-liquefy the gas. These are dollar linked, so every spread that they earn on that is will be beneficial for them, and that could improve their EPS by 1 to 3%. For oil marketing companies, it will be a mixed bag, but do remember that refining margins will see an improvement because diesel cracks, petrol cracks, they are doing really well right now, but they also import a lot of crude. So it will be an impact of 11% on their EPS positively right now, considering the macro situation that we are in. For city gas distribution companies, it will be a negative because they do import LNG, and that is a big part of their overall input, and that will have an impact of around 4 to 11% on their EPS, be it Gujarat Gas, Mahanagar Gas, or Indraprasth Gas Limited. For chemicals, the basket is huge, but specific stocks which tend to benefit because they are big exporters to the US, something like an SRF Limited, Naveen Fluorine, Atul Limited, all of them have big exposure to the US markets, and they tend to benefit because of this depreciation that has come by.
It's not really that bad news for the auto sector, especially from two-wheeler names. TVS Motor and Bajaj Auto are the biggest beneficiaries. For TVS Motor, 30% of their total volumes come from exports, and to total revenue, export forms in the range of 25 to 26%, so they are expected to benefit. Next name comes is Bajaj Auto. Almost 50% of their revenue comes from exports, and in Q2 FY26, dollar realization was 87.10, and they did gain on that front. Now in Q3 FY26, I did the calculation of last 2 months, and now the realization has increased to 89.10. And the management, while talking to CNBC-TV18 today early in the morning, they said that if there is a fall of 1 rupee, it improves or it lifts annualized EBITDA by rupees 200 crore. So now with realization increasing to 89.10, the positive impact can be in the range of rupees 350 to rupees 400 crore on annualized basis. Coming to auto ancillaries, 3 names I have taken: Bharat Forge, Samvardhana Motherson, and Minda. So for Samvardhana Motherson, rupee fall is marginally positive. So 65 to 70% of their revenue comes from export, but they have manufacturing base in the Europe and the US, so costs are also going to increase, so that will be offset by the cost increase. So benefits will be offset by cost increase. Coming to Bharat Forge, almost 60% of their revenue comes from the export segment, and they majorly have 3 segments: forging business, PV and EV components, and Class 8 truck orders. So they are going to be the biggest beneficiary as far as auto ancillary package is concerned. Last one is Minda. Rupee fall is going to impact negatively. It would be a negative impact for Minda because for them, majority part, or say 70% of their total revenue comes from domestic segment, and they are dependent on imports of the components. They import chips and whole host of other components. So costs are going to increase, and it will have a negative impact. But overall, it's going to largely have a positive impact as far as auto sector is concerned.
The softly devaluing rupee is very beneficial, as you said, to a company like ours, which has got almost 50% of its revenue coming from international sources. So it's very, very helpful. Well, on an annualized basis, every 1 rupee creates a EBITDA impact of 200 crores plus, because our exports are over $2 billion.
Well, that gave you a comprehensive overview of what is happening with the rupee and, more importantly, the impact across different sectors. But let's now talk about the stock markets. Also staged a recovery in the last hour of trade. The Sensex and the Nifty finally closing with marginal losses coming off their intraday lows. The Nifty dropped below the 26,000 mark, but finally closed just flat. And the Sensex closed about 30 points low. The Nifty Bank up in positive territory, but the pain really being felt more in the mid-caps there. The mid-cap index saw some sharper cuts down nearly 1%. But a CNBC-TV18 news break now confirmed, just months after getting relief from the Supreme Court, JSW Steel has sold 50% stake in Bhushan Power to Japanese conglomerate JFE for over 15,700 crore rupees. Nigel is standing by with the details of the deal that's now official. Nigel.
Well, that's right. A big deal coming in from JSW Steel, with JFE going ahead and picking up close to around 50% stake in BPSL, and for an equity value of around 15,750 crores, which would mean that the total assets equity value will be roughly around 31,500 crores. You put in there a debt of roughly around 5 to around 6,000 crores odd. So the enterprise value that this deal is being done at is roughly around 37,000 crores or thereabouts. Remember, BPSL, they had a debt of around 5,000-6,000 crores odd. And also in the first half of the year, the total EBITDA that they did was roughly around 1,500 crores, which means that for the year, on an annualized basis, they could do around 3,000 crores. Valuation-wise, well, the deal appears to be done at around 12 times EV on EBITDA, which is fair. Pretty good valuation actually is what they have got. How does the holding structure change? Well, as of now, the promoter entity of JSW Steel had in their personal capacity close to around 17% stake in BPSL. And the listed entity, JSW Steel, had close to around 83%. Now, post JFE coming in there, JFE will have 50% stake in BPSL, and JSW Steel as well will have close to around 50% stake in the company. Now, going by the way the shareholding pattern is changing, out of the 15,750 crores odd of equity valuation that JFE will be putting in, well, it appears that JSW Steel will get around 10,300 crores, and the remainder could go to the promoter entity itself. Then why did the stock see some kind of selling? The street was sniffing a much higher number in the vicinity of around 45 to around 50,000 crores. And the enterprise value now is around 37,000 crores. So maybe some disappointment on the expected valuation out there. And the rationale of the deal as well is something that the street is coming to terms with. The completion is likely in the next 6 to around 9 months. So it appears it's a big boost actually coming in for JSW Steel. However, the valuations is something that the street is actually split on, which caused the stock to remain a little bit nervous.
This deal gets 32,000 plus crores of cash into JSW Steel. It will be a deleverage of about 37,000 crores from the balance sheet of JSW Steel, because some part of the debt is getting transferred to the SPV. This is for 50% of the equity, which JFE will finally own. The balance 50% stays with us.
Okay, all right, got that. So then it appears like the deal is quite favorable for JSW Steel, going by these sort of calculations. Initially, the street's reaction was that it's a little bit lower. Give us a few details then. The last number that we have in terms of JSW Steel's net debt is the net debt is around 80,000 crores. Post this deal, you're saying that a lot of money will be coming into JSW Steel. So tell us, how does that reduce the debt number?
So yes, you're right. In 30th September, our debt was about 79,200 crores. And this 37,000 crores of deleveraging, where 5,000 crores moves out of our balance sheet because it will get deconsolidated post to joint control. And the balance of 32,500 crores of cash, net of taxes, will come in to deleverage our numbers. So therefore, in the range of 36,500 odd crores should be the number which will be used to deleverage the asset or spend on alternate capex in the near future.
All right, give us some clarification then, because the promoter entity had 17% stake in BPSL. What do they get in return post this deal, if it is in terms of money or it is in terms of an additional stake in JSW Steel? Just quantify that for us.
Yeah, it will be a share swap. So basically, they will get an additional share. They will get shares of JSW Steel. So the promoter entity stake goes up by about 1.42%.
Well, that's the big deal of the day. Now, the government has withdrawn its earlier directive to phone makers, which had made it mandatory to preload the Sanchar Saathi app. That is the state-owned cybersecurity app. Now, this U-turn comes days after the telecom ministry's order raised concerns over possibility of mass surveillance. Now, before the government announced the withdrawal, the Telecom Minister Jyotiraditya Scindia faced questions in Parliament. In fact, responding to Congress MP Dipinder Hooda, Scindia had promised to make changes to the order based on feedback, and just a few hours later, the directive was withdrawn. Now, here's the exchange in Parliament before the order was withdrawn. Remember, what we have now got is an official statement coming in from the government saying that the mandatory pre-installation stands withdrawn.
जब सिस्टम के अंदर प्रीलोड की रिक्वायरमेंट होगी तो डिसेबल करने के बाद भी सारे फीचर्स डिसेबल होंगे कि नहीं होंगे, किसी यूजर्स को ये बात पता नहीं चलेगी। तो कहीं ना कहीं ये जो एक अधिकार है निजता का, उस पे कोई बड़ा प्रहार तो नहीं है।
क्योंकि ऐप फोन पे है, इसका मतलब नहीं है कि वो ऑटोमेटिकली ऑपरेट हो जाएगा। जब तक मैं उपभोक्ता के रूप में उसमें रजिस्टर ना करूं, तब तक वो ऑपरेट नहीं होगा। और मैं उपभोक्ता के आधार पर, जैसे मेरे फोन पर सर ढेर सारे ऐप्स होते हैं, मैं उस ऐप को भी दबा के मैं डिलीट कर सकता हूं। तो ये लोकतंत्र में पूर्ण हक और अधिकार नागरिक का है सर।
कहीं ये जो स्नूपिंग के प्रश्न उठ रहे हैं पूरे देश में, इसको लेकर सिविल राइट्स एक्टिविस्ट से, कंप्यूटर साइंस एक्सपर्ट से, उनको लेकर मंत्री महोदय क्या कुछ कहना चाहेंगे?
फीडबैक हमें मिलेगा, उस फीडबैक के आधार पर अगर उस ऑर्डर में भी हम लोगों को कोई चेंज लाना है, उसके लिए भी हम लोग तैयार हैं। ये मैं अवश्य कहना चाहता हूं कि इस ऐप के आधार पर न स्नूपिंग संभव है, न स्नूपिंग होगा।
Well, that is the minister in Parliament. And as I said, it was post that exchange that the government has decided to withdraw its earlier order, which made the pre-installation mandatory for phone manufacturers. Of course, the DOT has to rescind its earlier directive as well. Now, the Lok Sabha has passed the Central Excise Bill to raise duties on tobacco products. Speaking on the floor of the House, Finance Minister Nirmala Sitharaman said the bill does not put forth any additional taxes. Take a look.
So essentially here, what was there before 2017, what was conceded by the Center for the Center for the GST Council to collect the compensation cess, at the end of compensation cess is being naturally reverted to the center. This is not a new law. This is not an additional tax. This is not something which the center is taking away. There was quite a lot of observation made by several honorable members that it is a cess. This is not a cess. This is excise duty.
Well, that is the Finance Minister. Now, chaos being witnessed at major airports across the country. More than 100 IndiGo flights cancelled today, leaving thousands of passengers stranded. IndiGo has blamed, and I quote, a multitude of unforeseen operational challenges, including a minor tech glitch and updated rules for crew rostering. Shivani Bajaj joins us now with the details. Shivani, what is going on? This is a pan-India problem that IndiGo is facing. We are given to understand that it has to do largely with the fact that they're facing crew shortages. What is that on account of?
Well, yes, IndiGo's operations remain heavily disrupted for a second straight day, with around 130 flights cancelled across major metros today, and the number is likely to rise as more updates come in. This follows nearly 100 cancellations on Tuesday, signalling sustained pressure on the airline's network. Sources suggest that the strain has been driven by mounting pilot shortage after the full implementation of stricter rest and duty norms from November 1st, triggering last-minute roster changes and widespread delays of up to 7 hours. Both arrivals and departures across metro airports have been affected, resulting in long queues, terminal crowding and extended turnaround times. Sources in the airport teams in Delhi and Mumbai also reported chaos at baggage belts, with delayed arrivals creating backlogs through the day. Now, IndiGo, in its latest statement, says that the disruptions were caused by a combination of technical glitches, winter schedule changes, bad weather, aviation system congestion, and also the updated crew rostering rules. The airline says it has now initiated calibrated scheduling adjustments for the next 48 hours to restore stability and progressively recover punctuality. Now, with cancellation still mounting, passengers are being advised to check the latest flight status before heading to the airport. Back to you.
Well, trying times for passengers. So if you are boarding or will need to board a flight If you're flying IndiGo, then it is best to check your travel details. Shivani, many thanks for joining us. Now, e-commerce platform Meesho's 5,000 crore rupee initial public offer was subscribed over 2 times on the first day. Retail investors showed strong interest in the offer, with their portion being subscribed 3.5 times. The quota allocated for non-institutional investors was also fully booked. The e-commerce major raised close to 2,500 crore rupees from anchor investors ahead of the IPO. Meesho's CFO Diresh Bansal said the funds raised from the issue will be used for the next 3 years. Take a look.
If you look at the use of proceeds, we are raising these for the next 3 years. I think that is our estimate of, what is the spend going to be in some of these headers for the next 3 years. And if you look at the historical trends, as we have grown consistently, some of our fixed cost base, such as our server infrastructure and other kind of fixed cost line items, including employee cost as well, have not grown at the same path or at the same pace as our overall top line growth has been. So operating leverage is a key metric that we would kind of keep tracking. Our fixed cost base, let's say historically, the server cost grew by only 4.5% when we grew at about 35%. And we'll keep maintaining that going forward as well.
Well, that's Meesho. And Maruti Suzuki is stepping up its electric vehicle push. The automaker plans to set up 1 lakh charging stations across India by 2030 and is also planning to widen its EV lineup. Here's Maruti.
In the top 100 cities, on average, between 5 to 10 kilometers, we are going to have our chargers.
And so these 1 lakh charging stations, what is the timeline for them to, be up and running?
We have given, our vision is by 2030, we will be able to do that.
Well, that's Maruti Suzuki's EV plan. And Asian Paints expecting double-digit growth in the coming quarter. CEO Amit Singhal said the company is gaining market share amidst increased competition. He expects total sales to hit 50,000 crore rupees in 4 years.
Right now, I think the whole peg is in terms of saying that we continue to grow higher than the market, and that's the pitch in terms of what we would take.
And you haven't been doing so for the last few quarters, and now you're confident of doing that, right?
The first 2 quarters of this year, we have grown higher than the market to that extent. And as you look at the H1, we have grown much higher than the market overall.
So you will continue to gain market
That's
share?
Absolutely.
Well, that's Asian Paints. Up next, India and Russia all set to bolster economic ties when President Putin arrives in New Delhi on a state visit tomorrow. A private dinner with Prime Minister Modi has been scheduled as well. That and more when we return. You're watching India Business Hour. Russian President Vladimir Putin and negotiators from the US appear to have failed to achieve a breakthrough on securing a Ukraine peace deal. Putin met President Trump's special envoy Steve Witkoff and Jared Kushner for nearly 5 hours. Russian officials have said the talks were constructive, but no compromise was arrived over territorial concessions for Ukraine. However, US Secretary of State Marco Rubio told Fox News that Washington has made some progress on security guarantees for Ukraine.
What they're literally fighting over now is about 30 to 50 kilometer space in the 20% of the Donetsk region that remains. And so what we have tried to do, and I think have made some progress, is figure out what can the Ukrainians live with that gives them security guarantees for the future, they're never going to be invaded again, allows them not just to rebuild their economy, but to prosper as a country, be a country that has an economy that grows theoretically, doing the right things. In 10 years, Ukraine's GDP could be larger than Russia's.
Well, that's Marco Rubio. The European Union has agreed on a timeline to completely halt Russian gas imports by autumn of 2027. The agreement was reached during overnight talks between EU institutions and national governments. The agreement includes a stepwise prohibition on liquefied natural gas and pipeline gas imports from Russia, with a full ban from the end of 2026 and the autumn of 2027. The EU has also pushed ahead with plans to use frozen Russian cash to cover 2/3 of Ukraine's financing needs for the next 2 years. This comes almost as all of NATO's foreign ministers met in Brussels. Well, India and Russia all set to bolster economic ties as President Putin arrives in New Delhi on a state visit tomorrow. India is likely to push for increasing pharma, agri and textile exports. Prime Minister Modi and President Putin will also discuss a free trade agreement which could be signed in future. Parikshit joins us now with more on the agenda for the Putin-Modi meeting. Parikshit.
India and Russia are all set to bolster economic ties as President Putin arrives in New Delhi on a state visit. This will be Putin's first official trip to India since the war in Ukraine began in February 2022. The two-day visit is scheduled to begin with a private dinner on Thursday at Prime Minister Modi's residence. The leaders are likely to discuss a free trade agreement which will be signed in future. So what does New Delhi want from Moscow? First on the agenda is boosting exports of pharmaceuticals, agriculture and textile products. India is also looking for stable fertilizer supply chains with Russia, along with higher exports overall. The two nations are also likely to sign an MOU on migration to enable mobility of skilled workers from India to Russia, and also boost connectivity between the two countries, which will help trade. Non-tariff barriers, regulatory impediments, defence co-development and export of defence equipment, including the BrahMos, to third countries will also be discussed. Remember, trade between India and Russia stood at $69 billion in FY25, with India importing $64 billion worth of goods and services. So clearly, India would want Russia to buy more and bridge the trade deficit.
India has always maintained its position of strategic autonomy, and to that extent, it is for us, or as industry, we are looking at strengthening our defense ties. This is something which we are already intertwined as two countries, and that is always going to continue in the longer term because of the strength between the two countries. It's a time-tested partnership that is there. We will be looking at seeing how can we supply more into Russia and vice versa. The obvious areas are engineering products, pharmaceuticals, IT, and so on. I think one concern on industry side is always going to be with respect to sanctions and that risk.
We are expecting President Putin to land in New Delhi this week. How do you see that as a business-to-business contact between the two countries?
First and foremost, this gets driven by the country's need and gets driven by the political situation between two countries. Trade follows thereafter. Yeah. And I'm sure we'll hear more in the coming days. Okay, and on the US front, do you see like what are Indian businesses expecting and hoping out of it? Because it's been a long time now since we are hearing that, you know, by fall or by December, and then there is no end to it. That's true. So we are all in the same boat over there. The US is the largest market. It is the market that knows how to invent and reinvent itself. It's the market which creates innovation. That's why it's the only country which has got trillion-dollar companies. Is the market which attracts the best of talent. True. But all this is changing. That will not make the US any less relevant for us. It can be and should be a large trading partner, should be a partner where we learn from each other, we supply to each other.
Well, and speaking of the US, President Trump says that he has chosen his nominee for the next Federal Reserve chair, but will announce the name only by early next year. As for Bloomberg, White House National Economic Council Director Kevin Hassett is the most likely frontrunner.
We'll be announcing somebody probably early next year for the new chairman of the Fed. I talked to Scott about taking the job, but he doesn't want it. You got the greatest job here. Yes, sir. Right? He said, no, I want to stay chairman. I want to stay right where we are, Treasury. And I think we're doing really great, aren't we? What are we doing?
Scott Bessent says no. Will it be Kevin Hassett? That's the big question. With that, it is time for us to wrap up this edition of India Business Hour. The news will continue right here on CNBC-TV18. We've got plenty lined up for you. For now, from all of us, goodbye. Thanks for watching.